Yes, hello everybody. My name is Florian Grummes. I am the managing director and founder of Midas Touch Consulting. And yeah, thank you very much to Minex for having me today. My topic will be a quick technical update on gold and silver. And before I start, please understand I cannot see in the future. I don't have a crystal ball. I cook with water like everybody else. The first chart that I have brought with me today is a macro chart. This is the weekly US jobless claims since early January this year. And you can see, and this is no surprise to you, they have been exploding over the last few weeks. We have now more than 40 million people in America applying for jobless benefits. And this is basically the same situation in Europe and in many other countries all over the world. It's the same situation. And the response by the central bankers and governments also has been the same everywhere on this planet, mainly by expanding their balance sheets. So this is the Federal Reserve balance sheet for America. You can see the balance sheet basically parabolically or exponentially sharply higher. We have now more than 7 trillion, the balance sheet. And the same thing is true for the ECB. In fact, they just today announced that they increased it again. The ECB balance sheet is now 47% of the GDP of the Eurozone. This is unseen and unheard of in the past. So liquidity trumps everything at the moment. And it is very likely that central bankers and governments will have to continue that path. And that means more money printing, more fiat money, more expansion of the balance sheets. The consequences can be seen already in beef prices. This is price for beef at the futures exchange. They're nearly up 100% over the last few weeks. So if you put this all together, we have the largest stimulus by governments and central bankers in history. We have devaluation of currencies worldwide. We have a loss of confidence in the system, and especially in the fiat money systems, because we're talking not millions and billions anymore. We're now talking trillions and soon quadrillions. And more people are looking for ways to preserve their wealth. And not only central bankers have become gold investors over the last few years, but now really investment demand basically is waking up, and many people looking to preserve their capital and their wealth by buying physical gold and silver. And also during the Corona crash and the Corona crisis, we've seen a disconnect happening between the physical and the paper gold market. And the spreads have come down a little bit, but still you can see the market is not working like it used to be in the past. And now let's look on a weekly chart for gold. This is the big picture. If you look here on the left side, the red circle, this is the all-time high at 1920 back in 2011. And gold came back all the way down to 1,045 in December 2015. And since then, gold is nicely up. The important takeaway from that chart now is that you see 1, 2, 3, 4, 5, 6 little red circles here where gold was trying to break through this 1350 to 1375-ish resistance zone. Finally, 1 year ago, it broke through that resistance, and since then, gold is on fire. And you can see this move has happened long before actually the Corona crisis started. And the same chart now with the two important trend channels. You see the darker green one, this one here. This is basically the trend channel intact since December 2015. A little bit more flat trend channel. And since August 2018, the light green, more steeper trend channel is in place, and gold actually is trying to also break out of this trend channel to the upside. And the next resistance zone that you can see on the weekly chart already is $1,800. On the next chart, we're zooming in a little bit more. This is the daily chart for gold. You can see this is the pre-corona high at $1,700. Already in late February, gold reached $1,689. This is the meltdown. Together with all the other markets, gold was sold off heavily. This was basically a liquidation event. And since then gold recovered very fast, actually was the fastest to recover. And since basically early mid of April, gold is moving sideways between 1660 and 1750, more or less. You can see we have a new buy signal and a stochastic, and it looks like that gold wants to break above this resistance zone here and then probably run against or towards the $1,800 level. the more important averages here. The blue one is the 50-day moving average, and the red one is the 200-day moving average. They both rise more or less clearly to the upside, and they do deliver good support on the downside. And the next chart would be a silver chart. Silver didn't have this nice up move that we've seen in gold since Christmas. Basically, it has been more or less moving sideways since last September, and Corona basically forced the prices sharply lower, and silver fell to a 10-year low at 1160, and since then has sharply recovered, and especially over the last few weeks since mid-April, basically silver is moving and pushing the whole precious metal sector higher. And we just yesterday reached 1835. We are having a resistance zone here, but overall it looks like this is not over, and might be possible that silver can go to $21 over the next few weeks. And usually, you know that the seasonality is not really bullish for gold and silver until early summer. Usually June, July, you find a bottom and not a top. But this year we have a US election cycle, so the president in America will be elected, and this is the 52-year statistical data filtered, and just the election years are basically showing us that gold tends to get into trouble late July, early mid of August, and then again 2 months before the election. So I wouldn't expect too much from gold, let's say late summer and towards autumn. I would be more cautious, while I think right now we still have everything in place to see higher prices over the next few weeks and maybe 1 or 2 months. And if we put all this together now, I have a bullish scenario for you, which I call the 70s stagflation bull market. Basically, it says that gold is in a bull market. It has been breaking out above 1350, and since then we're moving higher. And similar to the 70s, back then we had a stagnating economy, a real economy, while an inflationary environment, which was perfect for gold and silver. So in that case, gold probably will march higher. Of course, not always just on a straight line. It will always be a back and forth process, but in the end of the day, it should move higher towards 1800, a small pullback, then attacking the all-time highs at 1920. There might be a larger pullback, and that could coincide with the election. So maybe this could be seen here in, let's say, July or August, and then 2-3 months, little pullback in the market, and then after the US election, off to above prices above $2,000. And the important thing is really, I think gold is in a new bull market, and any pullback basically is a buying opportunity here. This scenario is a very bullish one, and I would give it probably a 70% probability. However, everything can happen, and if you believe that real economy is down, that the central bankers are not predicting enough, that the deflationary setup in the world economy will continue and force basically all prices lower, then I have this scenario for you, which is the more bearish one, and that would be that gold is basically working on a cup and handle pattern, and this would be the large cup over the last basically 9 years. And gold might run still to 1800 here over the next few weeks, but then fail at that important resistance level. This was resistance back in 2011 and 12. So gold might fail here and then start to correct and work on the handle here. And if the cup has taken us 8 or 9 years, I think it's realistic to believe that the handle will take at least 2 or 3 years, maybe even 4 years. And that could be a long, dragging, deflationary setup where most of the price is moving lower. It could be a rather slow situation here. And it could also mean that gold can work off the very overbought setup in which it is at the moment, without a doubt. So this would be a deflationary scenario over the next few years. And keep in mind, in that case, gold would test the former resistance zone here, 1350 to 1400 maybe. Used to be strong resistance. Now, of course, it's strong support. Often the market likes to move back and test these breakouts. So far, it didn't happen. And right now, it doesn't really look like it will happen. But still, this is the alternative plan B scenario. And also be aware that this would coincide very well with the uptrend channel here. So that would be the more bearish scenario, the plan B scenario. And I rate this at 30% probability. Okay, so I hope I could help you a little bit about the gold market, give you some ideas and more clarity maybe. Thank you very much for your attention. Thanks.